Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into a Form 8K. Don't worry if that sounds like alphabet soup. We'll break it down. Let's just say it involves a company getting a potential influx of cash, but with some strings attached, like a puppet show where the market might be pulling the strings. This report, called an 8K, is basically a company shouting, hey, something important happened to the Securities and Exchange Commission, or SEC for short. It's like their official way of keeping investors in the loop. This 8K is from HCW Biologics and it's dated February 20th, 2025. So the events discussed happened on or around that time. HCW Biologics is the company we're focusing on today. The most important part of this filing is under item 1.01 inches, which sounds boring, but it just means they're talking about a big agreement they made. This agreement could significantly impact the company. On February 20th, 2025, HCW Biologics entered into an agreement called an Equity Purchase Agreement with Squaregate Capital Master Fund. Think of Squaregate as an investor with deep pockets. This equity purchase agreement is where things get interesting. It's basically a deal where HCW Biologics can sell shares of its stock to Squaregate Capital, but they don't have to. It's like having a credit line. You don't have to use it, but it's there if you need it. The maximum amount HCW Biologics could get from this deal is $20 million. This is called the maximum commitment amount. This is a potentially large sum of money for the company. HCW Biologics gets to decide if and when they want to sell these shares to the investor and how much they want to sell. They have 36 months or 3 years to make these sales. The investor is agreeing to buy stocks from HCW Biologics, but HCW Biologics has to ask for the purchases to be made. That's why it's called put shares. The investor also promised not to mess with the stock price by doing something called short selling. Basically, they can't bet against the company's stock. This is to prevent the investor from profiting if the stock price goes down. The Maxim Group helped HCW Biologics find this investor. They acted as the middleman to create the deal. This agreement is in effect for 36 months, but there are conditions that could make it end early. If HCW Biologics doesn't use all $20 million of the commitment, then the deal is over after 36 months. HCW Biologics can end the deal whenever they want for any reason, but there may be some penalties. The investor can terminate the equity purchase agreement under certain provisions as set forth in the equity purchase agreement, including the continued listing of the company's common stock on an eligible market. This means that if HCW Biologics is no longer listed on a major stock exchange, the investor can walk away. HCW Biologics has the right, but is not required, to sell its shares to the investor. This is entirely at their discretion. The amount of shares that the investor can buy is determined by a formula described in the equity purchase agreement. There is a limit. The company cannot issue more than 4.99% of shares. The company has to keep in mind the total shares outstanding. The price that the investor pays is based on something called the VWAP, or volume weighted average price. It's a measure of the average price of the stock over a period. The investor gets a discount of 2%. HCW Biologics has to pay a $150,000 commitment fee to the investor for them to be in the agreement. This fee is in the form of shares. There's another agreement called a registration rights agreement. This basically means that HCW Biologics has to register the shares they might sell to the investor with the SEC. This makes it easier for the investor to resell those shares to the public later. The company agrees to file a registration statement with the SEC so that the investor can sell the shares publicly. The registration statement has to cover all the shares that could be issued under the equity purchase agreement. These agreements include the usual promises and guarantees that companies and investors make in these kinds of deals. Whether or not HCW Biologics actually sells shares to the investor depends on a lot of things. This includes how the market is doing, what the stock price is, and whether HCW Biologics thinks this is the best way to get money. The company plans to use any money it gets from selling shares to the investor to fund its research and development. It is important to note that this deal dilutes existing shareholders because the investor is getting newly printed shares, adding to the total outstanding shares. Now, let's zoom out and look at what this all means. HCW Biologics is a company that needs money to fund its operations, specifically its clinical development programs. This agreement gives them a potential source of funding, but it comes at a cost. They're essentially giving up a small piece of ownership in the company to get access to this cash. The good news is that they don't have to use it if they don't need it, and the investor can't bet against the company. The bad news is that if they do use it, it will dilute existing shareholders. The company is issuing new shares which are not owned by existing investors. What are the risks and opportunities? One risk is that the stock price could go down, making it more expensive for HCW Biologics to raise money through this agreement. They'd have to sell more shares to get the same amount of cash, further diluting existing shareholders. Another risk is that the investor could terminate the agreement if HCW Biologics is no longer listed on a major stock exchange. This could leave the company without a crucial source of funding. On the other hand, this agreement gives HCW Biologics flexibility. They can access cash when they need it without having to go through a lengthy and complicated fundraising process. It also sends a signal to the market that HCW Biologics has a backstop, an investor willing to put money into the company. This could boost investor confidence and potentially drive up the stock price. So, what's the stock price outlook? It's tough to say for sure. The stock price will likely be volatile in the short term as investors react to this news. This news is generally negative because it will cause dilution down the road. In the long term, the stock price will depend on HCW Biologics' ability to execute its business plan and bring its products to market. Based on this, a reasonable price range for HCW Biologics stock would depend heavily on their development progress in the coming months and years. Overall, this equity purchase agreement is a mixed bag. It provides HCW Biologics with a valuable source of funding, but it also comes with risks and potential dilution for existing shareholders. Given the uncertainty and potential dilution, I'm leaning towards a slightly bearish outlook on HCW Biologics stock at this time. Thanks for watching. If you found this breakdown helpful, please subscribe to Corporate Decoder for more easy to understand explanations of corporate filings.